Welcome, Stock and Lock fam. I think it's just right that we discuss the stock market for a second. Are we currently in a bubble? Is the bubble popping right now? What am I going to be doing? And just some helpful tips to help you guys maneuver the current volatility of the market. Okay. Only thing I ask from you is to hit that subscribe and like button and leave some comments below on your personal views of what's going on. Do you think we're in a bubble? When do you think the bubble will pop? Okay, so just please do that, and I'll go over two charts with you guys right now. The first chart I wanted to go over with you guys is the Buffett indicator right here, okay? This indicator shows you the market cap to GDP ratio or gross domestic product. It essentially shows you how overpriced stocks are compared to the actual economy. According to this, once stocks really reach above 1, then we are in bubble territory. For example, we can check out the 2000.com bubble right here. That was around 1.3-ish. The 2007 housing bubble, which was slightly above 1. And if we look at where we are right now, the Buffett indicator shows that we are right approaching 2. Guys, the second chart is called the Shiller PE ratio. So the PE ratio is calculated by just dividing the price of a share of stock by the annual earnings per share of that stock. So this particular Shiller PE ratio can really be applied to any index. However, in this scenario, we'll be applying it to the S&P 500 index. Whenever the ratio of the market is high, that essentially means stocks are overvalued. Vice versa, whenever the ratio of the market is low, that means stocks are undervalued. So if we look here on Black Tuesday, you can see the PE ratio to the S&P 500 was at 30. And Black Monday was between 15 and 20. And currently right now is around 35, 34. The third thing is that we have seen a lot of irrational movements and actions and actively going on in the market today where people are just investing loads and loads of money into really speculative investments, and even companies that don't even have any product until 30 years later. Yet these same companies are just driving crazy high valuations into the millions and billions of dollars. We see this happen time and time again when we see a lot of new investors and day traders, especially in a really bullish market, because people get FOMO, fear of missing out. They see other people making all this money and it seems like everyone else is making it, so they chase the hype and chase the trend. And that's what we see and what is common. Okay, guys, so I talked about the fact that we are in a bubble right now. The question is really, so what? What do we do now? What should we all do? Should we panic sell and get rid of all those shares, taking in whatever gains we have left, or should we just quit investing altogether? The answer is really none of the above, because the one massive problem of being in this particular bubble is simply that no one knows when the bubble will pop, right? We're just not sure. We're not sure if this bubble will pop right now, if it will pop tomorrow, if it will pop in the next 5 years. If any of these were true, a few things would have occurred. First, number one, stocks would have reached new levels of all-time highs. Okay, that's just a fact. Let me explain that a bit further for you guys. People have honestly been predicting that the stock market was going to crash pretty much every single day of 2020. During when that pandemic actually happened, though, we did see a slight crash around March. However, when it did recover, people just kept predicting that it would crash in June and in July and later in September. But if we actually look at the S&P 500 and just zoom out for a second, we'll see that at every single point and at every single month, we have been pretty much reaching an all-time high, all-time level, right? So all I'm saying is that time in the market is really more effective than timing the market. Let me say that again. Time in the market is more effective than timing the market. I'm not saying to go in and just buy any stock you see on discount or at a low price and just buy everything that's on sale. That's not what I'm saying at all. But this is a very clear wake-up call for specific people that have large allocations of their portfolios that are primarily investing into speculative options, right? Yes, I'll admit it, I am guilty of investing myself into some speculative stocks as well, but if you have been watching my previous videos, you can see that I do my due diligence, I show you guys research, and I explain why I'm personally invested in it. And so far, based on my portfolio, there's only a small sliver of stocks right now that I have that are speculative of my total allocation. So now what am I going to be doing in this current stage of this volatility that's going on in the market? Well, for me, like I said before, I make sure to do my research and my due diligence before actually investing in these stocks. I'm not saying that every one of my stock picks are extreme money makers and do phenomenally well. However, I am saying to you guys that I am comfortable with my investments based on that research, and I'm comfortable in ignoring any short-term volatility. If you ask me, I personally don't care if there is a dip in share price unless, and listen carefully, unless there is a fundamentally changing specific thing going on with that stock, okay, guys, in that particular company, okay, in that sector. In terms of what I will be doing, I will be continuing really to just dollar cost average into the plays that I have extreme strong conviction into, okay? Most of them are the ones that I talked about on my channel. Moving on, here are just some tips on how to handle the current market volatility as it is. If you are panicking right now, because maybe your portfolio is doing terribly bad and you're down 40% of your investments, then this is, like I said before, a clear wake-up call to each and every one of you to really just diversify your portfolio more. So to really give it just a further good examination, what you should be doing is reviewing all your positions that you have currently and looking back at where your goals were for that specific stock. Were you trying to make short-term gains? Were you trying to pump and dump? Were you actually investing into the future technology that that company has to bring or offer? Or were you just strictly keeping your money into a very strong, fundamentally high-valued company that, was a safeguard for you against any inflation or cash? Inflation in cash. So, after doing this, just make sure, all I'm saying, again, I'm not a financial advisor, but just make sure to just rebalance and invest into companies you believe in their fundamentals with strong conviction. And with that being said, tune into my up and coming videos this week. I have something in store for you guys.